Welcome back to our Talking Economics series, and with me today, the Commonwealth Bank's Chief Economist, Shephen Halmarick. Stephen, thanks for joining us.
My pleasure.
Stephen, the RBA held the cash rate this month at 4.35%. Can you talk us through that decision?
Yes, that was a widely expected outcome, including by us, the cash rate unchanged at 4.35%. And the Reserve Bank really continues to send the signal that they want to see inflation sustainably inside the 2 to 3% target range. That's happening a bit slower than they had previously expected. And they're also looking at the labour market as well as things like consumer spending. So the signals from the RBA continues to be that they think interest rates are going to have to remain at 4.35% for a little while yet.
So the next board meeting is potentially a live meeting. Will global factors play a major role in the RBA's decision?
So the next board meeting is early November. And as you mentioned, I do think global factors are really an important thing the Reserve Bank will look at, particularly in the US and China. So we've seen the two largest economies in the world ease monetary policy in the last few weeks by more than the market expected. We had a 50 basis point, a 0.5% interest rate cut in the US, and the Chinese authorities have now cut interest rates and using other policies to stimulate growth there. Most of the other major central banks around the world also cutting interest rates, UK, Europe, Canada, New Zealand, all moving rates lower. So I think there's real information context for the Reserve Bank in all that. And we think that's one of the reasons why we're expecting an interest rate cut before the end of the year, although our base case is now for the December Reserve Bank Board meeting. Another thing worth mentioning is that the first meeting of the Reserve Bank Board in 2025 is around the middle of February. It's actually 2 weeks later than the normal schedule. That means there's a 10-week gap between the December Reserve Bank Board meeting and the February Board meeting, which we think is a very long time in a world where policy is being eased and inflation in Australia is trending towards the target range and the economic growth numbers are very soft.
Finally, as we close out the calendar year, what other key data points will you be looking out for, and has your view changed on interest rates?
So the key data points are always the inflation and the labour market. So we get the September quarter CPI data at the end of October. That'll be critical to see inflation continuing to move down towards the target range. And it's worth mentioning that the August inflation number showed a fall in the annual rate of inflation down to 2.7%, mostly driven by the electricity rebates from various governments, but the overall deflationary trend can be seen in other parts of the economy as well. And then the monthly employment numbers are really important. The unemployment rate's at 4.2%. We think it'll be closer to 4.5% by the end of the year. And then there's the consumer spending numbers, retail trade, and also particularly our own CommBank household spending insights data will give a really good and early indication on consumer spending as we run into Christmas.
Great insights. Stephen, thanks for your time today.
My pleasure. Thank you.